TTCF, Tattooed Chef Stock Shareholders, do this now. How to deal with stock down 60 to 90%. What's the best investing strategies? Ultimate checklists are included. Holy smokas, this ain't no joke-us!
Well guys, welcome into today's video. Thank you so much for joining me as always. Hope you're having a phenomenal day out there. Alright, in this video.
Here today, I see a lot of red in the market. I see Tattooed Chef TTCF stock down 6.99%. Hot diggity. I did say I will provide hand-holding service on this particular stock. This price is getting closer to where I bought my position. But price is what you paid and value is what you get. I don't know how many retail TTCF holders of the chef are still out there. Calling all Autobots.
Calling all Autobots. We are under targeted attack. Cease all contact with humans.
We're all hiding. All Autobots are being hunted.
Come say hi and we can all grab a smoothie bowl. Chill, talk about the chef, Jeremy, and investing. In this video, I will share with you the best investing strategies to deal with huge drawdowns as big as 95%. Remember when the dot-com bubble crashed in 2001? Amazon stock lost 95% too, and you can see where it is now. Over $1.2 trillion. No one knows what the future is for the chef. It could become a niche player or a food giant. All I know is I'm excited to be a part of it. I know that 95% loss is a hard pill to swallow. But it's not over until the chef BK. So far that hasn't happened yet. So strap in, hold on tight. What's the best investing strategies ever? I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back to the Audacious Money Witch channel where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit, like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always gets rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true, you want to join the Audacious Money Witch Club, don't you? Even though the inflation is starting to cool around 4%, investors are still dealing with high interest rates, which ultimately put a brakes on the economy and slow businesses. This kind of environment effective in lowering inflation rate by banks tightening their lending standards, creating less money or credit, which is bad for business with less cash to borrow and grow, particular businesses like the chef. TTCF stock, it does hurt us as investors who are always looking for ways to compound our money. Business performance is choked across the board, companies make less profit, and generally share prices fall. That's why Charlie Munger said, we should be comfortable with making less, especially in the small to micro cap space, particularly Tattooed Chef stock, which is a SPAC from 2020.
Ridiculously silly cheap. I can easily see why this stock can potentially be a 2x, 3x, 4x, if not a 5x stock over the next 5 years or so.
There are SPACs that are looking promising, like Palantir, for example, a red-hot AI software stock today. The reason I bought up Palantir is to prove a point. If a business, SPAC or not, continue to beat earnings and revenue numbers, it will get recognized and bring back to life again by Wall Street. Interestingly, Charlie's close friend, Monish Pabrai, recently gave a talk explaining how we as investors actually can take advantage of this recession environment to make money. His idea, as he explained, is called circling the wagons. I don't know if you guys like G-Wagons. It's a Mercedes-Benz AMG's iconic off-road SUV. It's bought by wealthy celebrities as a fashion icon driving to Rodeo Drive instead of actually going off-road. Anyways, the point is, imagine you have a 6-car garage like in Grand Theft Auto 5. Any car or wagon is representative by an investment vehicle. What you are looking for are 6 big wagons that provide you the best defense in a dangerous world out there. AKA, what he is talking about is finding the 6 businesses that you can hold on to for life that continue to compound through the decades and ultimately protect your portfolio from literally all the other mediocre trades you made. This is something that most investors don't really pay attention to. But very commonly, it is the core reason behind the best investors' successes. Even Warren Buffett over the years has circled just a few key wagons that ultimately accounted for most of Berkshire's success and have protected the business from all the other mediocre decisions that he has made.
And then he goes on to say, in 58 years of Berkshire management, most of my capital allocation decisions have been no better than so-so. And our satisfactory results have been the product of about a dozen truly great decisions.
So, of the hundreds and hundreds of decisions Warren Buffett has made since 1965, when he first bought Berkshire up until today, the best investor in the world has ever seen says most of his decisions are trash. And in fact, almost the entirety of Berkshire Hathaway's success comes down to about 12 big winners. 12 wagons that made the difference between Berkshire being the largest successful company in the US by real assets and being a loser. Monish goes on to say that its investments, Geico, Coca-Cola, American Express, Apple, the hiring Ajit Jain, BNSF, National Indemnity, and so on, are really responsible for almost all that Berkshire is today. But what's the lesson here? It's that, as an investor, you really only need to find 6 truly great long-term compounders in your life to do very well. So what are you looking for? Look for a moat. Look for high return on investor capital. Look for talented management. And look for a long runway. I have an ultimate checklist for you later. Beyond that, the other important lesson is to never let them go.
The important thing was not that they bought these 12 or they hired Ajit. The important thing was they kept them all. So it wasn't the buy because they had, 288 mediocre to poor decisions. They kept those 2. Right? So basically, in effect, they kept all 300. They lived with all 300 decisions. And it was really important for these 12 not to have been deleted or sold. So basically, when we look at this kind of statistic, what we find is that investing is a very forgiving business. But it is forgiving if you don't cut the flowers and you don't water the weeds.
You hear people say, never falling in love with an investment. I say that's just BS. If you hold a company long enough, that company's vision and value will slowly become a part of you. You hear this with a lot of property investors. They will tell you the only bad decision they ever made was selling a property. Well, it's the exact same thing in the stock market. As a human in an AI world, we tend to notoriously short-term focused, and this usually makes us lock in profits as soon as we get them and then put that money into something else. Now, in Audacious's eyes, this is a huge mistake, and we should, instead of selling off, we need to hold on to these businesses for dear life when we find them. Just like TTCF TTCF stock, if you're already down 95% and you're still holding, just keep holding. You already lost most of your capital. Just hold on to those shares. It could be worth hell of a lot more than what you paid for it in 30 years. What else do you have to lose? Pretty much nothing. Don't think about how to get that money back. Think about how high this rocket can go in 20 years.
This is why it is so easy for me to get to a place where Tattooed Chef is at a $10 billion, $20 billion company 5-10 years from now. As long as they execute and get there, like, you know, this is very possible. This has been done. Like, this isn't like, oh my gosh, this has never been done before.
Just like Jack Ma said, when you start a business, don't worry about the competition right now. Worry about them in 30 years.
Don't worry about competition. There's nowhere in this world there's no competition. You have to get used to it. Forget about the competition today. It's like a 10,000 meters running. For the first 200 meters, don't think that guy is a competitor. Keep on running. 3,000 meters later, you will know who's.
TTCF stock, Tattooed Chef, is a baby company. It's barely only 3 years old. I have tried both Beyond Meat and Impossible Meat burgers. They don't really make you feel good after. You don't get the feeling of self-love. Oh, I am treating my body with nourishment, eating plant-based diet. It's good for my overall health, and it helps me find enlightenment. Tattooed Chef is truly a value-adding company in people's life. It's truly special. We should be enjoying the ride no matter the economic conditions. Just a reminder, when Monster Beverage was traded at 1 cent back in 1997, it's those investors that kept holding on to dear life made it out today with more than 100,000% gain. So it goes to show that in this recession environment, while it seems so hard to make money with penny stocks right now, we shouldn't be trying to do any sort of fancy finger work. We should instead be hyper-focused on identifying those long-term compounding businesses are being presented to us at a margin of safety prices. The big boys or the big money moves the market is always short-term focus. So while they're all selling and causing stocks across the board to fall, we have to ask, does this present us any long-term opportunities in great businesses? The answer, particularly in the stock market crash, is yes. So it's our jobs to cut through the noise and load up on high-quality compounders and prepare to hold them for the long term. Like long bond TLT, 20 to 30 years. So from a newspaper publisher in South Africa, Naspers only needed one solid investment, being 10 cent, for literally every single other thing they ever did to be completely irrelevant. The only thing they had to do was resist the temptation to cut the flowers.
The important thing was not that they invested in 10 cent, because they invested in many other things. The important thing was that they didn't touch it. And even today in 2023, Naspers is the largest shareholder of 10 cent.
This is very hard to do. Not taking a good result and hoping for an amazing result is very difficult. Nick Sleep is a very sleepy investor. He actually shut down his Nomad fund because he could essentially tell his investors everything he was going to do for the next decade. He said all he was going to do is to hold Amazon, Costco, and Berkshire, and then just go back to sleep for a decade. For that, they may as well just do it themselves. Even Benjamin Graham succumbed to the glory of holding one great business that was a long-term compounder. All these has shown if you have 6 really great wagons, you will have massive advantage. It really protects your downside. So the key lessons in the investing: number 1, avoid being overactive in your account. Number 2, when you are in any business, don't cut the flowers to water the weeds. Number 3, find your wagons and let them flourish over time. Just don't sell TTCF. If you want my ultimate investor checklist, the link is at the pinned comment below. My client Teddy Eazzy's book, Wicked Pussy Perfume, it is a femdom novel and it's about money, the stockings, and the stock market. Order your copy today. You are such a good boy for watching my video right till the end. Bye.